Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring, and today is Thursday, July 11th, 2024. How's it going? How you doing? Hope you had a good day. Hey, I had a good day trade today on Apple, intraday on the 5-minute that I wanted to share with you. Big down day in tech today, and the reason Apple came on my radar is this morning the futures were all up, substantially because of the CPI reading. And I looked to see what Apple was doing pre-market, and I saw that it was down. And I thought, oh, that's strange. And that is something to learn when the market is doing, when the market's up but something's down, its relative strength is poor. Alternatively, if the market's down and the stock's up, then the relative strength is good and strong. And so that's something to consider. So even before the market opened this morning, I was thinking about shorting Apple. And this was the beginning of the beginning of the day. This was the last bar yesterday, and we gapped down. So this gap down, when this gap down and it left this large gap here, this is called a bearish fair value gap. And this move down took out all these swing lows. So the way that I look at trading is that, okay, now we have changed to a bearish market structure. And so if you've gone from a bullish market structure to a bearish market structure, I want to look to short the rallies after the bearish market structure has happened. Alternatively, if you're in a downtrend and then you switch to an uptrend, then I want to look to buy the dips. Okay, so we opened up this morning down, we took out these swing lows, and we left this bearish fair value gap in the red box here. This is the low of this bar here and the high of this bar here. Well, the market opened. It went. I saw this happen. Went down. I kind of lost track of it for a minute, and then look at this bar here, right up into the bearish fair value gap, and then just collapsed. But I didn't get it. I was like, dang it! Why wasn't I not paying attention to that? But I got another chance. And a lot of time with these fair value gaps, you will get another chance. So I got to the fair value gap, collapsed, and at the moment I was like, well, maybe I'll see if I can buy at the 200. That'll give me a good risk to reward ratio. But then we moved back up into the fair value gap. Now, the fair value gaps for me are a little tricky because you can go ahead and buy them or short them. At least I do sometimes right when they get to the gap. A lot of times I'll wait for it to maybe get a little further into the gap or even higher because it ultimately gives me a good risk to reward. But in this particular trade, it was the next bar that got into the fair value gap. I shorted at 231.92. Now, as soon as I short, first thing as always with all my trades, whether I'm long or short, is I placed a 2 ATR emergency stop above my entry. And this is the red line here. Always 2% or 2 ATR distance up here. And I believe that was $1.15. So that's my worst case scenario. Now, I always have a second stop called an end of bar stop in this case because it's intraday. And this is just this swing high right here. You can see I have a red line drawn above it at 232.41. So we broke structure, missed the first rally into the fair value gap, worked like a charm, collapsed, came back in, got short at 231.92. I placed my 2 ATR emergency stop above. I have my end of day or end of bar stop here at with the close above this swing high at 232.41. Now I'm risking 2 ATRs to the upside maximum, so my profit target should be a minimum. The way that I trade should be a minimum of 4 ATRs. It should be 2. I should be able to have the possibility of making twice what I'm ultimately okay with losing, which is the 2 ATR. So I took my entry price here, the short, at 231.92, and I did the value of 4 ATRs, $2.30. Remember, 115 to the upside, 230 to the downside. And by the way, this emergency stop here only gets hit about 5% of the time in my experience. 95% of the time, if I have a loss on a trade, it's going to be by end of bar stop here. Okay, so I put my 4 ATR profit target down here, $2.30 below. Emergency stop, 115 above. And then the next bar, it moved up, and I thought, oh man, is this going to be one of those V formation days where you just go straight down and then whoop, straight up? Not today. Not today. So got short here, 231.92. My profit target down here, 220 or 229.62. And 15 minutes later, hit it. That was a great trade in 15 minutes. It doesn't look like a lot on this particular chart, but I believe it was almost 1%, very close to 1%. Yeah, 0.99%, something like that. But in 15 minutes, which was great. In hindsight, I should have done a 2 ATR risk with a 8 ATR profit target because I would have hit it. But you know, this was kind of an exceptional day. I hope this was helpful for you. If it was, I'd appreciate if you could hit the thumbs up button. These fair value gaps, whether they're bullish fair value gaps or bearish fair value gaps, I really find helpful in my trading on any time frame. And if you'd like to learn more about my trading, I have 3 options. I do a podcast on the weekend called the Gossett Trading and Mentoring Weekend Review, where I go through all the trades that I made in the previous trading week, both on the daily and the weekly charts. I talk about when I entered the trade, why I entered the trade, what the setup was, what the strategy was, and then how the trade played out, and how I'm managing it as it goes forward. And then I also talk about my upcoming potential trades for the upcoming week. So I think you'll find it helpful. I think you'll learn a lot. In these videos, it's about 10 minutes, but the weekend podcast is about an hour, so I can get into a lot more detail. Secondly, I do teach private one-on-one lessons in the evening time via Skype. I teach a 15-hour course, one-on-one. I teach you all the trading approaches that I use step-by-step that I've used as a full-time trader for almost 29 years now. It's a great course. I've taught people from all over the world. And when you're done with that course, I promise you, you will be a better trader and have a lot of trading skills. So if you're interested in that, my email's in the link in the description. And then lastly, I have a great online course available at udemy.com. I teach you step-by-step how to trade the deep dip buy stock trading strategy. That's a great course. I've had so many good reviews, sold so many around the world, and it's super affordable. So if you're interested in watching that, and that's a great place to start, very affordable. Like I said, the Udemy link is in the description of this video. So I hope you have a good rest of your day. By the way, you know, this was a big rotation day in the market, in my opinion. Obviously, tech got hit pretty hard. Clearly, there was a rotation into the smaller cap stocks, more interest rate stocks. You know, the high for the tech market, for the NASDAQ, it could be in. It could be in. Who knows? I'm wrong all the time, but it did have that feeling like something really changed today, and there were some rotationals. So be careful with your trading. Pick your levels. Define your risk as always. And stick to your plan, because you really need a plan in trading. So if you have any comments or questions, just leave them in the comment section. I'll do my best to get to reply to them. But again, hope you have a really good day, and God willing, we'll talk to you tomorrow. Thanks a lot, everybody. Take care. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.